result specific action. And now let's talk about a company which is involved in healthcare research analytics and technology segment, Syngene International. The stock is trading with a downtick of around 1.5%. The company did post its results and the earnings were quite a concern on many parameters, be it the revenue, the profit margin as well as the EBITDA front. Let's connect with the management of Syngene International and try and understand the forward-looking plans. We have with us Peter Bains, MD and CEO Syngene International. Peter, thank you for joining with us and giving your time to ET Now. My first question to you will be on revenue guidance. What will be the revenue guidance for FY26? What factors will be at play for that, especially with respect to US biotech funding environment?
Sure. So we're very pleased with the first quarter results, which I think have put us in a good position to maintain the guidance that we gave at the end of last year for the full year in 2026. So it's been, I think, a very solid start to the year with the first quarter revenues from operations growing 11%, EBITDA growing 19%, and a strong profit performance delivered from that, although the profit performance does contain a one-off. So it's a very positive start to the year, and it gives us confidence to maintain the guidance that we set for the full year going forward.
Mr. Bains, will you stick to your margin guidance as well in mid-20s, and by when do you believe inventory normalization impact can fade away?
So yes, we're holding to the mid-20s EBITDA margin guidance, and this quarter's presented a very firm foundation for that, coming in at essentially that number. The inventory challenge that we've had, is factored into our numbers. We are making an adjustment for with one of our customers on commercial manufacturing, where they've gone past the launch phase, and in a very natural way, demand is being adjusted. That's a completely normal pattern post a launch. And those numbers are factored into our thinking in maintaining the guidance that we've given.
Peter, talking about last fiscal, we saw H1 was pretty soft while H2 saw return to growth momentum. Can we expect similar trend this fiscal?
So I think it's clear that we do have some seasonality. Q4 is always a high quarter. Q1 is generally softer, and then it starts to build through the year. And I think we should look to see that pattern repeated this year.
Peter, business expansion plans as well as capital expenditure is one important factor for businesses. What will be the CAPEX guidance for FY26 and how do you plan to spend that?
So the CAPEX guidance for the full year is around $55 million, and that includes around 10 to complete the preparations for our Bayview biologics facility in the United States. The CAPEX will be spent about a third in our discovery services, building in new capabilities. For example, this quarter we've inaugurated a state-of-the-art peptide lab. So we continue to invest in extending Syngene's capabilities to support our customers in some of the exciting new modalities coming forward. In our manufacturing, we will we'll be spending about a third of our CAPEX there. Some of that will be going to complete the preparations for Unit 3, the biologics facilities here in Bengaluru. And then we have additional CAPEX which would be spent on routine maintenance, but there's a portion of CAPEX now that will be assigned to AI and automation. And so we would expect to see CAPEX being spent in those areas. And this quarter, an example of that would be the automation of our DMPK capability, which has been automated, and that's going to improve our turnaround times from 5 days to 3 days and improve our cost efficiencies.
And Peter, you mentioned about the newer facilities which will be contributing in company. How do you see these newer facilities actually turning around and contributing in this fiscal year completely?
So the Unit 3 facility here in Bengaluru, we're pleased to say that this quarter we've seen the first operational output from that, being a clinical supplies for a biologics to one of our customers. So that's a key milestone as we look to ramp up the Unit 3 operationalization through the rest of this year. With the Bayview facility in the United States, what we've said there is that we'll look to operationalize that in the second half of the year. So we're preparing for that. These preparations are going well. A full team now has been assembled in Bayview, and the preparations to begin commercial operations there are in good order for the second half of the year. And in the Mangalore manufacturing facility, again, there we're looking to increase utilization, and the first quarter has given us confidence that we'll see that pattern through the rest of the year.
Peter, you have earlier said that you see AI as a tool and opportunity, not a threat to CRO model. Are you still on that view now?
Very much. At Syngene, we are, advanced and moving fast on technology applications in our services, and these include automation and digitization. Where we are looking to automate across our service platforms. And with AI, we do have significant activity there. We've set up a platform, Syn.ai, where we're looking to utilize artificial intelligence as a tool to enhance our service offering, to look to provide more innovation, to reduce timelines, increase the speed, to reduce risk, and of course, to look to reduce costs. So I think we see AI very fundamentally being a dynamic that we are going to deploy across our service platforms and build on going forward.
Okay, Peter, thank you for joining with ET Now, and good luck to you and Syngene International for the quarters ahead. Well, on that note, moving on, Nestle